Good afternoon, ladies and gentlemen. May I please urge everyone to take a seat. We have very crucial session to start, and it all involves the bottom line, money matters. That's nice. Pin drop silence. Money does matter. So the fourth session begins now. This is to do with working capital and payments. Just one moment. My apologies. Before we go to the actual money coming in, we are talking about credit. So first of all, may I urge everyone to feel a little bit energetic. I know the session after a lunch break is always a challenging one, but we are hoping that you will take charge of it. So this session is to do with the access to credit, which is an extremely crucial component of any business. So we have a dedicated session on access to credit. This theme of the session is geared towards being the key enablers for success to manufacturing and MSME sector. This session will be chaired by Mr. Anjani Kumar Srivastav, GM SIDBI. Mr. Srivastav, may I please invite you to come to the dais? Thank you, Mr. Srivastav. We have an expert panel. The session will have the panelists from bankers to start with Mr. Yogendra Pal Singh, General Manager, State Bank of India. May I invite you to please come to the dais? We have Mr. Vivek Samanwar, Regional Head, MIB ROMG of Yes Bank. Thank you, Mr. Singh. And now I would request Mr. Vivek Chaturvedi, Vice President, Kotak Mahindra, to kindly come to the dais. Thank you, Mr. Chaturvedi. Mr. Srivastav, may I request you to take charge of the session? I think you have the most challenging work this afternoon.
Yeah, I do agree.
It's the post-lunch session.
Absolutely.
So you have to get everyone going, but I think credit does it.
Yeah, money speaks. Hopefully, as Madam has said, this is the post-lunch session, and I hope all of you had a good lunch. And none of you goes to sleep when we deliberate or when we discuss our issues or whatever we are discussing here. So I once again welcome all of you here to this session. And today we have a very elite panel, a very interesting panel here. On one side I have Mr. Yogendra Pal Singh. He is General Manager of an SBI, the largest bank in India, of course, the bank in India, I will call it that way, which defines banking in our country. And he has got an enormous experience of 32 years of banking with him. So probably I'll put it that way, that he has seen banking since the days of liberalization, where and probably the days when manual ledgers were prepared. I agree. You'll agree, Mr. Pal.
I joined the banking that time only.
Absolutely.
I joined.
So this is, I'll call him the millennial banker who's kind of born at the time when in the early 1990s. On the other side, I have Mr. Vivek Samanwar. He is from Yes Bank and he is the Gen Z banker. He has joined probably in the early 2000s. He joined banking in the early 2000s. And we have Mr. Vivek Chaturvedi, who is right now with Kotak Mahindra, and he's a banker and an analyst. That's the added feather in his cap. So we have an interesting panel here to discuss issues. The access to credit to MSMEs as well as to the manufacturing sector here today. So I think all of you have been listening about the context of economy that is right now. We are in the Amrit Kal. There is a clarion call by our PM for being a developed nation. We have the G20. Yeah, of course. But then, of course, there are a lot of contrary winds that are running. Inflation, as usual, it keeps going up and down. Even the US Fed rates are showing no signs of abating. And accordingly, our interest rates also, are going to go accordingly. They're going to go up only right now. So, and the impact is, of course, going to be felt by the MSMEs. In spite of all this, India continues to be the country with the highest projected GDP that is going to take place. Again, there is a contrary winds which says that quarter on quarter we are slowing down. So, where are we going? Production capacities are peaking. But where is this production going? Demand is going up. But at the same time, a lot of issues are there where MSMEs said, I am not able to access credit. Why? Because we are going to discuss this here, of course. Okay, so as far as the access to MSME credit, I am sure, again, most of you would be knowing it, a lot of interesting things have taken place. First thing is that digital banking has come in a large way. That is one. And second, RBI has ushered in the account aggregators framework, which is again going to be a revolution in making. Probably it will, at a point of time, it will parallel something like UPI, where APIs are being extended to information providers and information users. Another area is the trades platform. The trades platform where invoice discounting is taking place. I mean, access to credit can be in any form. It can be in the form of a term loan, or it can be in the form of working capital. Any form it can be. So, starting the discussion, I think the first question I'll put it to Mr. Singh here is that, yeah, SBI is the largest bank, and we all know that SBI defines banking. So, would you like to?
Every form regarding this, we have grown. I compare as compared to last few years, we have grown by more than 20% in SME segment this year. So we are expecting, we have crossed 3 trillion marks this year, and our chairman is also expecting that the 4 trillion mark is not very far. So with this growth rate, and what I am also observing, see, earlier we used to see after this COVID period, we are seeing the people are coming to us, our bank, and they are approaching, sir, how we can help them out. And even earlier, if we say the Prime Minister came out with this Sonidhi, PM Sonidhi or PMMY, earlier we used to see that government disbursement scheme used to turn into NPA. But now the people are, after seeing this progress, they are about their progress also. So these accounts are also giving us business, a very handsome business. And these people are also establishing themselves towards means upward side. So I hope in this period, I see it is a challenging period in another way, but for banking sector, it is very good. Our NPA has also come down below 1%. It is around, if net NPA says, which is around 0.77, which were peaking in 2015-16. So that way, our SME sector particularly, not only the growth. I am for last 2 days I am in Pune. So I was seeing whether I can see our bank has this area, this Pune area, they have identified what the auto industry, the auto ancillary, whether we can finance this all the auto ancillary units under SME sector. And I am happy to share that our bank has financed almost more than 30 units. My team has financed this, and a good amount, more than maybe 150 crores or so, small units. So that is a very good sign for the industry also, or for country also. Thank you.
Now that's nice. In fact, when we talk about digital banking, there were times when the balance sheets or the information provided by the SMEs was not very transparent. We never used to come to know that whether the information given by the SME is true and fair, is a true and fair representation of his business. So I think the real change that has now taken place is the access to GST. And GST, which has been ushered in by the government of India, the access to the GST information, the access to credit information companies, and of course
Yes.
the account statements, which you can obviously run through the account statements. A combination of these three elements is giving a lot of transparency and a lot of comfort to the banker to really assess the requirements. Don't you think so, sir?
Yes. What is happening when for one side we are seeing that account statement, second side we are seeing examining the GST. If they are matching, and then we come to the conclusion that the borrower is eligible for so much finance. No other things are required. And if civil report is okay, that all the credit information reports are okay, then it is easier for us to take a decision in that matter. And what is happening, sometimes we have developed so many programs for on these lines, and where the customer need not to approach to the bank also.
Yeah.
On the basis of 3D information, we are sanctioning those loans, and people are also happy. Yesterday, I was talking to because I know many of here people are from Pune. So yesterday, I was asking one of the Pune rural area, what you people are doing, and they told me, sir, yesterday only these business loans on totally on digital platform, 14 people approached them for these loans.
Wow.
And amount was also more than 3 crore. So it is good thing. The people are coming and they didn't approach to the branch also. That is there. And our analytical program, they find out those person they are eligible, they are doing, maybe there are so many things that they are arriving at that decision, but they are sending that message to that person, and our branch also came to know about this, and they are approaching to that person, and totally in a transparent manner they are availing that facilities.
That's nice. In fact, to share with you this, the very first digital platform that came was this PSB 59 online, where SBI, SIDBI, and two other banks, they came together, they set up this platform, and within 59 minutes, an in principle sanction was being handed over to the borrowers.
Yes, I remember at that time I was in Delhi, and in that program, particularly that function, Sushma Swaraj Madam came there. And in that August presence, that product was launched for SBI, in particular Delhi center. And that response, initially days, because I was also banker and we started his career through all these ledger and all those things. So I was a little bit skeptical whether how it would be possible to sanction that loan and this. But it came out very nicely. And when we mixed our technology with this, all those results, and now I'm seeing that growth, the bank is growing the way. So nothing is impossible now. We can see that.
Great. So coming to Mr. Samanwar.
Hi, sir.
He is from Yes Bank, and we've seen Yes Bank has seen quite a turnaround from what probably a couple of years back. So, Mr. Samanwar, what is Yes Bank doing about credit to MSMEs? I'll ask in a very plain language.
Yeah, I would just like to touch upon when you said turnaround of Yes Bank.
Yeah.
So I take a lot of pride in being part of Yes Bank family, primarily because obviously everyone has witnessed the development and the turnaround story. But the most satisfying or the part of it was customers' trust in all these years, even during peak crisis time. Hardly customers left us, especially for MSME business. And whatever left, we were able to win back within a couple of years' time. So that has been a phenomenal journey. Having said that, our MSME book, even at the peak crisis time, was largely unaffected at the corporate level, whatever was happening. And when I reflect back upon those days, so it comes to my mind that it was primarily due to our value proposition to customers and very strong relationship at the ground level. So these were the two differentiating factors why customer stood back and still reposed faith in our system. So our book is more than 25,000 crores and is one of the best books performing in the entire bank and across the industry also in terms of profitability. So in that sense, and you talked about what we are doing specifically about MSME business. Yeah. So we try and work upon the problems which MSMEs face. So typically, as you are also aware, the problems faced by MSMEs are time taken to access credit. Then right product is not available for their requirement. Whatever is there has been given to customers. Then collateral requirement. And of course, lack of flexibility from bankers' perspective. And the last one is financials or bank statement, financials or balance sheets are not that organized. So when we observed all these trends, so we our endeavor has been to design all our products to address these problems. Otherwise, we will not be successful in the market.
Absolutely.
So that has been the whole philosophy. Considering that into mind, what we have done is we have divided our lending into specific categories. One is cash flow based lending, wherein we, as sir touched upon, about GST and bank statements. So we lend basis that up to 5 crores we give. That is a fantastic cap without any requirement of stock statement or stock audit. So that gives flexibility to customers in terms of accessing the credit also, because decision taken for these cases sanctioning comes down drastically, because you hardly have to look anything. And we have moved the entire this product suite on digital platform. So that helps, means even at customers end we can do all this processing, and within few hours you have an idea whether customer can go ahead with the sanction or not, and what is the amount he can expect. In case the score is not adequate, it moves into a credit team's bucket for manual assessing. But even either of the scenario, time taken comes down drastically. And the second part is wherever there is no plain vanilla requirement of CC or OD, we get into a more structured kind of product, but that also is scorecard based. Say for example, customer wants export-import finance or term lending, more complex products with related to that. Then we work our offering in terms of scorecard. So it's very simple. Higher the score, lower is the collateral requirement. So that's how we work, and that works really fine in taking the decision and taking a judicious decision, so that we serve the customer's needs also, and at the same time protect our book, because we have done that analysis regarding that. And as I was talking about digital lending platform, so in last few years, of course, we were working on digital lending offering. So now entire login to disbursement can be done on a digital platform, except for the mortgage part. Wherever there is a mortgage, means we do not have those tools to digitize that as of now, but otherwise everything is being done digitally. So that's a fantastic offering. In addition to that, we were talking about trade or export-import requirement. What we have observed is a lot of MSMEs do not have that kind of awareness regarding these products, where they can access credit wherever they are exporter or importer. So they have an access because a lot of government schemes are going on, like EPC, wherein RBI gives upfront subvention of 3%. So hardly few banks promote that. So what we try and do is educate customers, irrespective of the size of the customer. So there is a customer delight in that. But now the challenge comes, customers' objection is, I do not know all these things. I have never gone through this. So what our answer is, we have a dedicated team for you who will guide you throughout end to end till the execution. And they will also guide you on the compliances part, other processes and products related to that. So that works fantastically. So we have a very granular book in terms of this export-import finance. And of course, there are other products like CGTMSE and all those things. So in a nutshell, what we are trying to do is we are trying to develop an ecosystem wherein we tap customers at their respective life cycle. So that we can cover a wide spectrum of customers. So it should not happen that we are focused only in one segment. So that is where our offering comes in accessing or giving credit to MSMEs. So that has been our endeavor all these years.
No, that's great actually, trust, which he mentioned, trust. The customers had trust in the bank, and of course, banking only takes place when there is trust between both. The bank also has trust on the customers, as well as the customer has trust in the bank. So that is quite an interesting comeback for Yes Bank, and it's very interesting to also hear that you talked about cash flow based lending, which is actually it's a very good concept and a very interesting concept as far as theory goes, but when it comes to banking, you find a lot of bankers shying away from cash flow based lending because they don't understand, and many of them don't understand anything other than security. They said, you want collateral securities. Agreed. And for the same reason, CGTMSE was brought in, and you have products around CGTMSE. And in fact, in the last budget also, you would have heard our Honorable Finance Minister announcing that 9,000 crores has been added to the kitty of the of CGMSE, the whole idea behind increasing, this kitty is that this helps in leveraging credit. 9,000 crores of fund in the guarantee scheme, gives a 5 times credit, kind of
It's
reach.
a snowball effect.
Yeah, it's a snowball effect. Okay, so that's very interesting. So as you said, your models, you prepared a scorecard. So what I understand is you're in fact from the days of very subjective assessment of the borrower, in terms of credit assessment. Now what you're doing is you're basically parameterizing the whole process into various parts, various parameters, giving probably scores to that, and then arriving at a decision where you're in a position to give a loan, and arriving at what extent of loan you want to do.
Just a couple of things I would like to add, sir. You talked about cash flow based lending and bankers shying away from that. So all these years means we were pioneers in starting this cash flow based lending, and it was somewhere around 2012-13. That was the first time we touched upon this way of lending. So what we have observed in last 10 years is, although general assumption is if you have not looked at the financial, you are not sure about the strength of the organization or the MSME customer. But this is one of the best performing books what we have right now. So that's means that defeats the notion that if you are not looking at financials, customer is not good. So that gives a lot of comfort, and that's why we are enhancing our offering in this thing. In addition to that, what we have done is a lot of manufacturers get orders. Okay, and there is sometimes there is certainty in order where they are dealing with corporates. They have a predefined schedule for every month. But at times people are working on project-based funding, project-based requirement. They get order, but it is not defined. Now they have come across, means we have come across when they say, I have got the order, now I need to execute this in 15 days, but I do not have sufficient working capital, whatever you have given it to me. Earlier what we used to do is, we used to then assess it once again and then give, so it used to be time consuming, this thing. So what we have done is, we have given a pre-approved ad hoc limits to all our customers, maximum customers rather, wherever the score or performance is good. So they can access this ad hoc limits throughout the year within a day's notice. So that works fantastically. So customer is never short of funds. At least his visibility that funds are available so that I can go ahead and source more business.
Oh, that's great. So next, Mr. Chaturvedi. So you are a banker as well as an analyst. So probably the question that I'm going to pose is more on the analytics side. So how do you see underwriting models changing? Considering that the information of MSMEs has, like the way information of MSMEs has kind of transformed in the whole landscape.
Thank you, sir. Am I audible?
Yeah, pretty much.
First of all, I'm very thankful to all the people present here and BCC&I for organizing and inviting me. So I've been sitting here since morning, so I'll answer that question, but with your permission, I'll also mention few points which I've been observing from the morning, starting with Mr. Chakrabarti. So there are few words which I kept on hearing is that one, collateral keeps on getting repeated. Second word is interest rate. Third word is, I heard again right now, is transparency. Can you trust the the balance sheet and statements? And then everyone has a lot of complaint that banks are fair weather friends. They give loan to people who don't need it. Now we all need to understand one thing, right? That bank is a different kind of business. I have experienced, and it's my observation, like in every business, you want, once a customer has taken a product, you wish that the customer does not return it. Right? You don't want a customer to return your car which you have sold. You don't want a customer to return a pen if you have sold it. But bank, once has sold a product, sincerely wants it to be returned. That product is a loan. Right? If that loan is not returned, banks will be in a problem. So that is one fundamental difference. Now when it comes to loan, again there are two parties to it. Right? So there is a borrower and there is a lender. The borrower has complete information on the business he or she is doing. The lender also wants to have a peek in that purpose, why the loan being used. And at times that is not so transparent. There's some opaqueness. Now, there's a natural inclination. If I'm a businessman, I would want to focus on my business and not be answering questions and filling forms. No one wants to do that. As a lender, I would want to have complete knowledge of that. So that brings us to the question that how do we solve this, right? So I also incidentally started with State Bank of India like sir, but much junior to him. And since I have some gray hair now, I can say I am eligible to go back in time and think of older days. So when I was in State Bank of India, it was said that MSME is a touch and feel business. So all of us said, how do you evaluate it? It's touch and feel. Now those people who are not very good at that, banks were not very good, very objective, so they would not be hesitant to lend. And there were days in 2000, so if you look at technology, so I'm going to talk about 4 things then now. First is data, because I work with data. Second is technology. Third is analytics, and fourth is adoption. Right, to answer this question which has been posed to me. So in 2000 was 2001, 4, 5, 6, those were the years when banking was moving to core banking. Right? Before that, banks' data was stored in their local systems. Now, from local systems, there was a centralized server. Right? Many banks use the same software also. So the core banking solution for many banks is Finacle. So in those 10, 15 years, what has happened that there's a lot of data which has been collected. But it was easy to collect data. It was not so easy to make sense out of it. So therefore came the concept of analytics. So I work for analytics and we try to find pattern and meaning in data. And you must believe me when I say this that systems are very, very powerful. So this word artificial intelligence is a real thing. The systems and the artificial intelligence can be much stronger than human intelligence at times because there's so much data to learn from. So we then thought of technology, that while the data is there, how do you make sense of it? It was not available, right? Because when you process data, it takes a lot of computing power. Now, it's a very common knowledge that computing power has increased. Then there was a layer required to convert these data to someone who solves business problem, as we have discussed just before the lunch, that you don't adopt technology for the sake of adopting it. You want to have some sense of it. So you needed people who would make that sense. That has happened. So by doing these, now we have models which will help banks take decisions and better decisions. Those decisions will be taken just the way a human underwriter would take a decision when you have information about the borrower. Digital India is, I think, a great progress we have made. Now we have data about the borrowers. We don't need to. So one of the thoughts was they would ask for forms, and now there's no need to ask for forms and information. All the financial information of all companies is available at one place. Right? So Ministry of Corporate Affairs stores it, and there are various data aggregators who provide that. The banking behavior is also available, so there is no need to ask for it. GST, the sales, purchases is also available. So because of all this data, the life for us has become easier, and we are in a position to just reduce the time of underwriting. It has gone down significantly for many banks. We are one of those. I think what is going to happen now, it has already started, but it's going to take much pace, is faster adoption. So if you try to draw 2 curves, right? One on x-axis, if you have time, and then you draw a line of technology. Technology can increase very fast, right? There's someone doing some research in the world. And below that, you draw another line called adoption. Adoption will not increase so fast. Adoption requires a lot of things, a lot of push. So adoption has started happening. With these elements in place, I think the progress has already been made, as Vivek sitting next to me told about real examples. I can tell you that we have got models which make use of all this data and have reduced substantially to few days time from underwriting. And the amount of information which customer is bothered to is not being asked now. Now to address the point on collateral, banks did not have that much faith in the cash flow lending, so they were asking for collaterals. And they're probably asking for something more than would be a good security cover, because the property prices also keep on varying, right? If you have a collateral, if you have a collateral which is industrial property, it's difficult to value. But now at our bank and other places, property prices are also available without asking someone. So there are a lot of aggregators who know the residential property. So you know what is the price of an apartment in Mumbai, in Thane, in a particular locality. Going by the name of the builder, you can search it. So all these things put together have been a good journey, and credit access because of this has gone up and will definitely go up further.
Great. So, as you said, with the kind of efficiency that has come in because of availability of all this information, there is still a very common complaint that people don't get credit. So, whether our underwriting models are too stringent for access to credit, or probably the risk-taking power of is still yet to evolve into taking greater risks.
So I think that people don't get credit is wrong. They want credit at a certain price. Maybe they're not getting at that price, right? But when I speak to my colleagues from the business team, I always get to hear that no, you don't get customers, right? So when I sit here, I hear that customers are willing to take a loan and banks are not willing to lend. So I think that risk appetite will vary from bank to bank, right? So every bank has set certain measures. Now, it is not that banks are not willing to lend. I can't say for one bank, so a different bank has their risk appetite. Yes, there is still, I think, scope for improvement, right? That can it be improved further? And I have known that we are quite competitive. I mean, we are going out and trying to build book further. We are present in, say, 50 locations in SME, 100 locations in business banking. So I don't think there's a case of borrowers who are good borrowers and who have all the information not getting loan. Maybe people, are not able to provide the information, as I said. Right? It's one thing that you're not able to provide. In some cases, the information does not exist. Right? So for this kind of audience, which is more of medium enterprises, everyone has a banking history. So information is available. There's a segment in India which has no banking history. The extremely poor people, the micro enterprises. Now, I know of startups, I'll share one idea. I know of one startup who provide loans to such people of no banking history by reading their SMS. So they take a consent, they get to read the data. Whatever SMS is on their phone, they'll read the SMS. By doing text analytics, they're able to figure out what is the credit worthiness. Because if there's a SMS that this is overdue, the word overdue, that right, or you have a word that you've got a credit of this much amount, 5,000 rupees. Now you know who has made that transfer. You can find that out. So doing that, Indian startups have gone to the extent of serving at the bottom of the pyramid as well.
Wow, that's very interesting. In fact, when we talk of MSMEs, the spectrum is so wide. When we talk, I mean, right from somebody on the street who is wanting 10,000 rupees, so who is generally covered under the PM Swanidhi Yojana, the street vendor, to an MSME whose turnover is 250 crores and an investment in plant and machinery of 50 crores. So that is the spectrum that we are trying to address here. So, but at the same time, obviously every segment has its own, model for evaluation and model of assessment of risk and underwriting model. So, coming back to Mr. Singh, here, what do you think are the key risks for MSMEs?
MSME, particularly, first of all, that is a formal banking channel. Means people don't know whom to approach, and how to approach. That is the one thing. And if you see the below strata level, you have PM Sonidhi and these vendors earlier, they were have their own doubts whether banker will, how they will treat me and whether I will go there, whether they will finance me and this. I remember one incident when I was 24 years back. I was in one rural branch. One person wanted to establish one small shop, one kirana shop, and he came to meet me, and I saw him, and I was there. And you see the face of the person, okay, whether he genuine or whether he would like to do that business. And I said yes. He went away. My colleague told me, sir, you observe, he doesn't have both hands. And how you will sign the papers? And banking, actually, you have to sign all the documents and this. And how you run the kirana shop? I heard that person. I found the genuineness in him, and I will go for it. I did that finance. Within 2 years, he repaid me, and he was such a successful person in that locality that my this belief in the person that was established. If you go by your instinct, that will run. So what happens? What you are asking, main challenge is whom to use. And second thing, they are working on a very thin margin. Big establishments, they are more technology based. Here the skill power is less. Then they don't know how to. They don't know these financial parameters, and these they are wholly dependent on other person, maybe some CA who will prepare those papers, and he will approach the bank, and they also demand that money. And as usual, they are working on a thin margin, so they can't afford to that. So if some organization helps them, so State Bank in that purpose came out with this technology-based financing, where if the person is opening their account, then we are monitoring that. What my colleagues have also said, they have all their artificial intelligence. They are parameterizing all those things, and system is automatically assessing those limits. So that will help those people which are facing all type of this. They are working thin margins, or maybe they are not approaching to the people, bankers in that manner, or maybe the technology advance, that is on the technology front also, people are not helping them. So that may be covered.
In fact, another issue which I think, sir, is that MSMEs, their management bandwidth is quite limited. In fact, when we talk of MSMEs, it is this promoter who is, though it may be a public limited company or a company, he may give it the shape of the company, but it is actually essentially the main promoter who is running the show.
Yeah.
So,
but you see, there, as my colleague have also said, coverage, you are a collateral coverage. Collateral is one aspect. But I am seeing after so many years, government is also providing that support. The CGDMSC coverage available from up to 2 crores. So up to 2 crore finance, when we are getting that government guarantee, or maybe some this CGT guarantee, so it is helping us also. Bankers usually in what I will say, the public sector banks, they are very of this their charge sheets, and they say if some loans get bad, they are being charged because you have done something wrong. So when this is covered by some collateral, so they get that confidence also in that person. If something goes wrong also, so they are safe. The amount is recoverable. And not only this, if the person is going to other financial also, they are also the private lenders also. And nowadays you see the growth of NBFCs. They are financing this state of lower income people, and this this MSMEs, they are financing it. And bank, by way of supporting these NBFCs, are indirectly financing too.
Yeah.
That is also happening. And we are co-lending, either we are co-lending or we are pool purchase those accounts, and this. This is also helping us. Government has also directed you have to do at least 60% financing in this area. So your priority sector lending also may be 40%, and if you have to achieve that, otherwise you have to invest in the RIDF, and this there you are getting only 3% or 4% rate of interest. So it is a loss making proposition also. So that way we are thinking how many we are covered this, and it is giving us good returns also. If you see, the MSME is giving us very good returns.
In fact, there are different business models. We have to understand that banks have been built on a very different business model as vis-a-vis NBFCs. Now, we talk of the, the not the larger ones, but the medium NBFCs. They are more feet on the street, I'll put it that way, and they understand the subprime strata much more than probably banks. That is what you're saying.
Yes, what happens, the bankers usually, all the banks, they are having one branch and they have tied up with other people. There's recovery agents also, they have tied up this with credit rating agencies also, they have already tied up with some who may guide them on the basis of their financing, and this every state of their financing, and these are helping banks to assessing those limits, whether that person is eligible for that finance and this. So maybe and directly the way NBFC, they can go to the lowest level, but banker has some limitations. We have to open that branch, we have to make ourselves profitable, we have to have this brick and mortar branch maybe. So maybe because of all those reasons, that profitability aspect, so we are confined to that branch. But by associating with the NBFCs or maybe other our business partners, we are doing this.
So basically, we are facilitating the access to credit
Yes.
by giving credit to NBFCs so that they can lend further.
That is one
They don't
way,
have any shortage of funds.
Yes, but if the person approaching directly, that is the most welcome part.
Yeah.
We appreciate that the people directly approach us and we can finance them directly. And
But
there is no dearth of this money.
Anyway, it's better than going to a money lender.
Yes, it is always better.
Yeah.
Because you can get that maybe depending upon that credit rating or this, but mostly these MSME loans are available at 10 to 12%, 13%, and that is there. Yeah, it's much cheaper.
So MSMEs, I mean, as I said, they are, they're a one-man show, and many times, while they are concentrating on manufacturing, they may not be able to concentrate on sales, or if they're concentrating on sales, they might not be able to, focus on the administration of their entity, or banking is a totally different ball game for them. Whether they understand the needs of the banker, what a banker wants, and apart from that, the huge number of compliances that they have to kind of adhere to. I would ask Mr. Samanwar, how do you think MSMEs can organize themselves better to be better placed for growth and avail finance?
To be very honest, sir, when we go out in the market and talk to various customers, of course, the objective is to onboard customer, but we also try and work on a partnership model. As in, how do we add value so that they improve their efficiency and grow in size? As you were talking about earlier, MSME spectrum is quite vast, up to 250 crores. So how does MSME, when he's starting or they are starting, go to that level? So there are key differentiators, whatever we have observed, because those differentiators then define their borrowing capacity and credit worthiness. And it is directly proportional. You increase your credit worthiness and you grow your business simultaneously. Because if your credit worthiness is not great, definitely it will have an impact in growing the business. So what we try and advise customer on few particular points, like maintain the banking behavior, because it is a very critical component whenever any underwriter is looking at the proposal, or the digital tools which Vivek was talking about. Otherwise, straight away it gets rejected. So one is banking behavior. Second is, see, it might sound in a very limited way. There are people who out of good faith go out and act as guarantor for their friends and distant family members. So at times they fall into this trap, because if those guys default, then your own credit worthiness goes down. We have seen number of proposals like this, because borrower's record is clean, intact. Only because of guarantor they have stood for some other loan, their credibility goes down. So I think that can be avoided. In addition to that, there are certain tools which are available for MSMEs which they can work upon and improve efficiency, like adapting products like letter of credit, bank guarantees, instead of just using their CC facility or overdraft facility, because those are efficient products and saves cost also. And another thing which we try and advise customer is whatever funds has been given by bank, please use it for their intended purpose. Like if it is used for, if it has been sanctioned for working capital, please don't use it for long-term capital expansion. Because if those funds get stuck, your overall working capital cycle gets disturbed and it has an impact on your overall business. So that's where advisor as a bank comes into picture, because if the right product is not given to MSME, then they will fall into that trap. Another, we were talking about business loan, which are readily available at a click of a button nowadays. So it is very important that those are used very judiciously, because since funds are available, that's why they should not borrow. We have seen number of customers, very sound business model, they are involved into the business, they have their own capital, but they have fallen into trap of business loan. Now business loan comes at a very high cost. So unless and until you need as a stopgap arrangement, business loans should be avoided, or if you have taken, that also is fine, if it is used for intended purpose. But slowly and gradually, it should be converted into the designated purpose loans. So that has been our advice to a lot of MSME customers.
Great. So I think financial discipline is very important. That's what in, probably I'll put it in one couple of words. So Mr. Chaturvedi, going beyond credit, how are banking services evolving and for meeting the MSME credit needs?
Well, that's a very good question. See, bank, the service of bank credit is just a part of it. Now, as a customer, we need various things. So, business customers also need. They need foreign exchange, right? They would, if say, get remittance from outside, someone who is an exporter, then they require those services. Then there's, as Vivek was saying, more structured product, letter of credit, etc. So that helps the banks as well, because what happens that when you give loan, as regulation, you have to keep aside some money, right? Just for the sake that loan does not come back. Now, when you give loan, you make interest on it, and that's a source of income. But if you have given loan, you keep aside some money. If you make money from non-loan, right? So if you make, as a bank, a bank makes money, suppose by trade finance, or by not trade finance, let me say the services, right? So of issuing a bank guarantee, for example, by making money by collection services, right? So then for the same amount of loan which has been given, bank is making more income, right? So that's interest of the bank. Now, of course, this has to be very convenient, right? If you look at the needs of a business banking customer, it is divided at 3 levels. First is onboarding. From the customer, it is onboarding or account opening. From bank's perspective, it is called acquisition. Second is having acquired a customer. What will a bank do? They will sell them one product, second product, third product, right? So that's called cross selling. That's the second layer. The third layer is transactions. Now people spend a lot of time, and typically used to spend, I'll say, by visiting branches for paperwork related to various sort of transactions, right? Now I'm answering that question, that what other services. So at Kotak Bank, we have launched something, a solution called Fin. So it's digital for transaction banking. So the customer does not have to go to branch, right? They are going to upload their documents on Fin. There's not even document required. There's mostly workflows there, which is self-serving. So the time which would have taken to go to a branch and that process is reduced. It's a win-win. It's a win for the customer because your effort has gone down. It's a win for the bank because eventually the cost also goes down. Managing a branch and staffing it with people has a cost. And so much so I'll touch upon the other point of so much so that lot of these transactions are directly from the, it's called host to host. So customers don't have to even log in somewhere. They have to just provide some information and consent, and data is pulled from their server to bank server. So that's the level to which we have gone.
No, that's great. So it was quite an interesting conversation. I would like to ask the audience if you have any questions to ask from our panel. Yeah, please. Can you please identify yourself first and then your question?
I am Balkrishna Shirke from Excel Enclosures. I want to ask you how to select the bank.
How to select the bank?
Yes.
I would put it this way that you would be having a current account or a savings bank account in some bank of
Yes,
yours.
yes, but I want to change the bank. Then what should be the criteria to select the bank?
I would like to say that first of all, every customer would like to have the services best. If services are good, you would be happy. Secondly, your cost of funds. If you are getting the cheaper funds, or maybe your cost of transactions is coming down, so which bank offer you the best rate, you can come to that. These two aspects are more important, most important for the any MSME customer. And type of facilities also, if you see the type of facility any bank can provide, all type of facility at the one center, that would be the best.
As Mr. Chaturvedi said, you're looking for the right price and the time, your availability of funds within the time that you want. So whichever bank is providing you that, you must approach that.
I would like to add to his query. Selecting a bank is nothing less than a marriage, I guess, because you don't shift banks very frequently, because there is a cost involved, there is a service issue involved. So what I would suggest you is identify the requirement per se, your first core requirement, and then everything can revolve around that. Say for example, you are looking for additional funds, so that becomes a core this thing rather than only cost, right? Because if that is not getting fulfilled, having a lower cost does not help you. Plus the flexibility in bankers' approach, how flexible they would be for your future requirements. So because that thing is going to define, because bank should come in as a partner, not just as a lender. So I think those few things, if you keep it in mind, then obviously I'm sure you can have a better choice.
So I'll just add one thing, as I'm agreeing with Vivek, that while so many banks in India, they also have their strengths and weaknesses, right? So someone might be say better at internet banking, someone might be better at branch presence, and customers also have their own preferences. So on the same example, few years ago, 5-6 years ago, I used to work for a rating agency called Smera, which was subsidiary of SIDBI. So we did a survey, right? Our pitch was that if you get an external rating, the interest which will be charged because of a rating will be slightly lower. So we did a survey and we called up some 1,000-2,000 people and asked them that, do you benefit because of our services? The most common answer was that we don't care about, say, 25 basis point or 50 basis points of interest. Many people said that, right? I mean, 0.5% will not really matter to me. What my challenge is that banks ask for a lot of collateral. So in this example, right, in this particular example, for someone who is willing to, bear a slightly higher cost, but wants to go for a bank which is, more flexible with collateral requirement, would choose that. Someone who has plenty of collateral will want to go for a lower interest rate. Someone might have a requirement of 80% of sales is export, and whichever bank has better services there, they might want to choose them. And of course, banks will always want to be good at all those things, right? I'm not saying that anyone is lesser at anything. I'm just saying that now you do your own evaluation and look at match your needs. While we would want, we also want to, match our services with the customer's need. Customers should also do the same, match their requirements with banks, what they're providing.
Great. So I think that was a very interesting conversation. And do we have time for another question? We'll wrap it up. Yes. Okay. So I think with this, we'll conclude our discussion here. Thank you, Mr. Singh. Thank you, Mr. Samanwar and Mr. Chaturvedi. It was a very nice discussion, and thank you, gentlemen and ladies and gentlemen, for bearing with us in this post-lunch session. Thank you.
Thank you.
Thank you very much, Mr. Srivastav. It was a very interesting discussion we had, perspective from different banks, and you have quite a mixture of PSU and public sector, private sector, good combination. So may I now request Mr. Sanjay Behra, Chairperson of the Manufacturing and MSME Committee, Bengal Chamber, and Chief Sales Manager, Tata Steel, to give the mementos to Mr. Anjani Kumar Srivastav, Chair of the session. Thank you. To Mr. Jogendra Pal Singh, please. To Mr. Vivek Samanwar, please. And to Mr. Vivek Chaturvedi.